Welcome to Credicence's credit decision tree. This allows users, in this case lending institutions, to build their own decision tree that pretty much governs or dictates the process flow of the credit process, right? And it's going to automate that. So here on the right sidebar, you have a range of different nodes that you can include in your credit decision tree. So there are like 5 categories that we have so far. We have the question category that has generic questions. We have the condition category, which has conditions of threshold, no, and yes. And I'll later on in my example show how the threshold works. We have the decision category, which are, to accept, reject, or additional review. We have the trade and working capital ratios category that shows the different liquidity ratios that are normally tested whenever there's a trade and working capital facility request in a bank or lending institution. And finally, we have the term loan and debt ratios category that has debt-related ratios that need to be tested for debt and loan requests. So for the sake of this exercise, we're going to build a very simple decision tree, right? So the first question is going to be if the client is AML compliant. So from my experience in dealing with banks, I normally do a screening to make sure that this borrower is clean, right? For the sake of this exercise, we're going to assume that this bank is going to immediately reject the application if the client's not AML compliant. And if they are AML compliant, it doesn't necessarily mean it's going to accept it, but it's going to move on and do the following preceding tests, right? So the next test we want to do is, the debt to EBITDA ratio to kind of like test the debt levels to see if it's sustainable to grant an additional loan. So what we're going to do here is put thresholds, right? And a lot of the lending institutions that I've dealt with, some of them tend to be comfortable with customers or companies that have debt to EBITDA ratios at levels at or below 2.5, right? In other words, the level of debt must not be more than 2.5 times the level of EBITDA that the business generates. In other words, the earnings, right? So in this case, the condition will be greater than, right, 2.5, right? So in this case, if the debt to EBITDA ratio is above 2.5, we want to reject that. So we're going to put the reject node under this, because on the threshold, we put greater than 2.5 as the condition. And now on the opposite node, we want to put less than 2.5. Right, so if debt to EBITDA is less than 2.5, that is a desirable level of debt. So we want to move on to the preceding test. So for the sake of this exercise, we can include debt to equity. Where is it? There it is, the debt to equity ratio, right? Then we'll connect the node over there. Now over here, we're going to want to put a threshold where the acceptable limit is debt to equity ratio of 3.0. So therefore, on the nodes, we're going to put a threshold node here. On threshold node, we're going to put a condition of a threshold above 3.0, right? So we'll put here greater than 3.0. Right? That's extremely high debt to equity. So therefore, a decision for something like that, we want to reject immediately. And then here, we're going to put the opposite condition, which is less than 3.0. So I'll just jot in 3.0 here. Right? And for something like that, we want to accept. And voila, here we have it. We have a very simplified credit decision tree. Obviously, in real life, it's way more complex than this. And in the next video, we're going to show you how to submit a credit application. And you're going to see that the credit application is going to follow this decision tree.